So silver's up today, but it's sold off. And I'm going to show you exactly why this is a classic pump and dump. Now, over the weekend and early or late last week, the media was talking about how the Wall Street Bets Group, they're going after the silver market, and it's going to be the next silver squeeze. Well, that's completely wrong. And in the Reddit group, they specifically have said that that is not what they're going after. So who's putting out this information and why? And I'm going to tell you exactly why this is how the big boys play when they want to pump and then dump shares onto the general public. So my name is Joshua Belanger, and this is another episode of Follow the Money. So let's take a look here at silver, and right now we see silver at a new 52-week high. So this would be the classic hysteria, get people all excited, or really just a lot of noise in the marketplace to get those on the other side. Someone has to take the other side of the position. So the Wall Street Reddit group, the Wall Street Bets group, has several times has said that they are not going after silver. So why is this getting pushed around? Well, this is starting to get on Twitter. And this is a classic hedge fund or a trading desk technique to kick around this kind of chatter, this noise that gets picked up in outlets, news outlets, and or algorithms, and it creates this buying and this momentum. And this is how a lot of trades in illiquid markets operate, is that they kick around this this news that's not accurate, and it gets picked up on the news wires, and then you see a lot of momentum. And kind of seeing the same thing here in silver. And I'm going to break down exactly the insider secrets or insider knowledge that a lot of people are not going to share with you to help you understand exactly what's going on. Now, GME, GameStop, is a rare occurrence that we probably won't see ever again. The amount of move or what has happened exactly in that position, probably I have never seen it, and we probably won't see that for a very long time. It's a very unique situation. A lot of things came together at one moment of time, and there was also other funds behind that money as well, not just the Wall Street Bets Group. So a lot of things sparked the snowball effect, but on short squeezes, we don't see that kind of, especially on a stock like that, we don't see that kind of move. And in the silver market here, we're not going to see that kind of squeeze as well. I'm going to show you exactly why. So silver here gapped up to $28 and then sold off. Now, we're looking at a daily chart here. So if you just look at the daily chart, is there a trend here? No, there's no trend. Silver, and specifically commodities, they gap. And the market's different than equity markets here. But if you just look here, it's hard to get in a position here because it gaps and then it doesn't gap. The only time it really got going here was in July. And it got going here, gap, 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 and then the same way. It's hard to trade this commodity. It's hard to trade the metals like this. And if we just take a look here on the, let's go to a monthly time frame because it's going to be a little bit better to look at this. So 20 year, and we take a look at the monthly chart here. We have to look at where prices were once before. Back in right here in 2011, hit a high of $48, and then a low in 2015 of 13. Well, there's a lot of sellers above here. Now, to think that prices are just going to go skyrocket and you're going to get a squeeze like that in silver, again, there's a lot of volume here, and it's been declining for several years here. So you have this pullback here, it's firmed up, and now you're seeing that. These people, if they're in a position, are probably wanting to get out. And this is overhead right here. So you have to look at what was previous to understand what and how things are going to work out. This is a market, this is not going to work out like GME. There's not going to be a squeeze. We may see momentum, but we're not going to see something like GME in silver. This is a perfect opportunity for someone on the other side to unload this position. Specifically, the ETF here is a professional. It's a institutional product that is only provided by them. So to understand exactly how and why this is going on, this is a perfect institutional product by a fund trying to unload or trying to create some kind of misdirection on doing this. The other thing too we want to look at is what is the market priced in here? Understanding volatility in the marketplace. This has taken it to another level. I know on Robinhood it's easy to just buy shares and just hope that things go out, but this is what professionals do. This is how professionals look at the market and understand how to navigate the market here. One thing I'll show you here is if we take a look here at the options market. The options market creates a expected range in shares. And if we just take a look here at the if we take a look here going into on the 31st, coming into this week, we can get an expectation of what the market was pricing in going in here. So right here, this is the implied volatility coming into this week. They were pricing in this ETF a $2.30 move higher or lower. Now, what I want to share with you is we did exceed that $2.30 move, but what did we do? We backed off that. We came off that and we sold. Why? Because the market saw that and the market sold into it. So if we exceed that, that's where the pressure, that's where that momentum starts to build, because now those that are short have to cover. But if we don't exceed that, we see the selling coming. So that's where the battles are fought. And every equity, every commodity is always different. So right here on the five days to expiration, that was that battle. Now if we look at 18 days to expiration, that was $4, and well, it's a little bit higher now. Previously, it was $3.60. Again, we moved into that level and we backed off. So you see, when people have positions on, especially in a commodity, they have hedges. There's speculators and there's also hedging that's in there. So hedging is going to be done by those that are mining or looking for silver, and those are going to be hedges that they have on in very sophisticated futures positions that have this. So when we see this, or when I see this, this is a classic someone just trying to pump something and almost trying to get people confused. This is why we see it sold off here. I don't see this going any higher here. I think the silver squeeze is one. It's not even true that the Wall Street Bets Group is going after this one. It would be very foolish for them as well. The opportunities in silver, if this were to be the case, are going to be in the names that are mining it, such as this one right here. AG was the one that went to 14 to 24. This one is let's see, this is easy to borrow, so this is not even a short on here. But this is, again, you're seeing a lot of momentum here. This is an easy to borrow stock, meaning that there's not high short interest. And there's a few other names here that as well that have increased overall. If we just take a 3-year weekly, take a look here at the $20-year monthly. Again, this one as well, where that high in silver, now you're seeing this kind of go into it. Well, these people that have been in here are going to sell into this move here. So to think that silver, it's completely inaccurate that silver is going to be the next squeeze. But this is the kind of news that gets picked up that confuses the average investor, because when they're not understanding exactly how things like understanding what the market has priced in or the expected move is going to be, or just picking up what's being told to them and not actually doing the research. Because if someone actually went into the Reddit group, they have specifically said, we're not going after silver. It'd be impossible. There's many times that people have tried to corner the silver market and it hasn't ended well. So this is going to be one of those that is just a pump and dump. It's going to be one where someone's on the other side trying to unload shares for whatever reason. But this seems to be where it's a trade desk or some kind of institutional desk that's pushing this to really just be distracting and to unload shares here. So if I were to look at this trade here, we take a look at some of the options that traded in this specific name today. There was some new positions being put on in this February contract in the option market. I think it was in the this position here, but really there's just a lot of noise here. This is a position here that, as you saw, very up and down. Not a trade that is interesting Long term, to store wealth, silver is interesting. Trading wise, looking for the next squeeze. It's not with silver. It's not this one. So uh, we'll see. We'll see on this one. But again, the opportunities are going to be in some of these miners, such as AG and some of the other silver names. But there's just a lot of noise. It's a lot of hysteria. If you got a position, if you got into AG, sell it. AG is not going to go any higher from here. If it does, it may go up a little bit higher, then sell off. We're not going to see that continuation like we saw with GME. Again, it's a very unique situation, but that's the market. Every equity is different. Every situation is different, and you always have to separate them and understand that a one-off is just a one-off. And to navigate the market successfully, you just leave it as a one-off, and you try to figure out how to navigate the next situation. So that's what I have for you today, and hopefully you were able to learn a few different things. I know it's a little bit in-depth, but that's how the market works. You got to be understanding of exactly how everything kind of works together and why it matters. So I'll see you in the next video, and make sure you like, subscribe, and leave a comment. Talk to you then.